Will the stock market continue moving higher? What does it have to do with the Phillies anyway? So what do the Phillies and the stock market have in common? Well, let's take a look. Just like the Phillies were down 5-0 last night in the ball game, the stock market was totally at the bottom here. You can see how the market capitulated 3 weeks ago when it just crashed and then came roaring back. Then it pulled back again. And since that time, just like the Phillies, the market has rallied to win. So the big question is, will it continue to go higher? Well, let's take a look. One of the very telling metrics that we have can be seen in our bottom analysis indicators. Now, what are you looking at here? If you haven't seen these before, the orange line is a bottom forming indicator. And when it's at 100% like this or very high, it's usually indicating some kind of a bottom is being formed. Now, what else has to happen for that to be true? Well, you see the dashed line is a confidence level. So you need a bottom forming indicator to be very high, and you need the confidence level to be very high. Kind of makes sense, right? So you can see we had a bottom forming indication here, very strong one. And then this blue line is a bottom confirmation. Now for a bottom confirmation, you need the blue line to also be up here near 100% and a very high confidence level. Well, you can see that didn't happen here, and you can see that the market also continued going down. So then what happened? We got another bottom forming indicator here, again a very strong one with a high confidence level. And then once again, the bottom confirmation indicator never really made it up to where it needed to be. So the market faltered yet again. Now, what's happened recently? Well, this last Wednesday, the bottom confirmation indicator got all the way to 100% with a very high confidence level. So we do have a bottom confirmation. So what does this mean? Well, for us, we took the hedge off of our clients' accounts and went long because we have a bottom confirmation. Now, this doesn't mean the stock market's going to go up forever from here. It could just as easily turn around and come down again. But this is a good indication we've seen the worst of it, at least for a little while, hopefully longer. Another great way to look at the health of the markets is to take a look at these rankings. So we take various sectors and indices and we rank them in terms of recent performance. Now, what are we looking at here? Well, let's go back to August 17th when we had what looked like a fairly healthy market. Now, we all know it didn't last long and the market continued going down, but this is an indication of a healthy market, whether it'll stay that way or not. So what do we have here? Well, we have small caps and NASDAQ, the higher risk indices, ranked 1 and 2. That's exactly what you want to see in a really good bull market. Usually the higher risk equities will go up sooner, faster, and more than the safer equities like the S&P 500 SPY or the Dow Jones Industrial Average DIA. Now, cash was ranked number 5. This is not ideal. You really want cash to be ranked at the bottom, but the reason cash is ranked number 5 is because the treasuries were not healthy. So that's why they're ranked at the bottom. So this is an unusual market that's showing equities ranked really strongly, but treasuries not ranked very good at all. Now, what happened by September 30th? Well, we got exactly the opposite here. Equities all at the bottom, and cash, T-bills, and gold ranked 1, 2, and 3. So safety assets at the top, equities at the bottom. This is a very unhealthy equity market. And then by October 14th, a couple of weeks later, yeah, cash and T-bills were still 1 and 2, but you can see the equities are now starting to float up here out of the muck. The Dow Jones Industrial Average is up at 3. That's not what you want to see. That's kind of a tentative market. That's a market that's saying, yeah, I'm going to invest in equities, but I'm going to put my money in safer equities because I'm not so sure yet. And that's not ideal, but it is encouraging that equities were coming up and moving up here. Now, what about this past Friday on October 28th? Well, we have the Dow ranked number 1, small caps ranked number 2. That's good. By S&P 500 3, and NASDAQ 4. I'd really like to see the NASDAQ roll up here into the 1 or 2 spot in order for this rally to be a little more convincing. What do we have on the Treasury side? Well, cash is ranked number 5. So just like back here, we have an unhealthy Treasury market. Now, hopefully that'll begin to remediate soon as the Fed realizes they don't need to keep raising interest rates. In my last video, you heard me talk about what happens at a market bottom. So what happens at a market bottom? Well, the riskier assets start to go up sooner, and they go up much faster than the safer equities. Well, what do we have here? What are you looking at? Well, this is the number of days since the most recent bottom. So let's take a look at ARK. ARK is the most risky set of equities that we're measuring here. And if this was a really definitive market bottom, ARK this red line would be going across, all the way across here, because it would have started going up sooner, and it would be higher than the rest of these. Well, that's not what we have here. In fact, IWM, which are small caps, actually did start going up sooner, but it's not higher than the Dow. So this is telling me this is somewhat of a tentative bottom here, which gives me a little bit of concern, but we have to see how it plays out. Things don't always work the same way every time. The market will fool you more than you'll be right. But let's look at what's happening. So we had small caps start out very early. They have been rallying the longest, but you can see they started to fail here, and now recently they've started shooting up again. The Dow, which has been leading the way, the green line, you can see has done very well, and it went up sooner than some of the other ones like the NASDAQ 100, the yellow line. Now, ARK Invest, the riskiest basket of stocks here, started to rally really late. As I said, if it had started early, this red line would be going all the way across this chart here. But instead, it started late, it faltered, but now it's really starting to shoot up. So this is encouraging. If this behavior continues, I think we're good. I'd also like to see the NASDAQ, the yellow line, really start to rally here and take off and beat the Dow Jones Industrials and the S&P 500. That would also give me more confidence that we've actually seen the bottom here. Let's look at each one of these and kind of see what's going on under the covers with the buying and selling pressure, because this will tell you a lot. So first of all, let's look at the Dow Jones Industrial Average. Well, you can see it started rallying fairly early back here. And you can see before it started rallying, the selling pressure, this orange line, was well above the buying pressure, which is this solid gray line. But since that time, the selling pressure has started to wane here, and the buying pressure has increased and is now above the selling pressure. And you can see the 1 month trend, this short dashed line, is increasing, and the 2 month trend for the buying pressure, this longer dashed line, is also increasing. This looks really good. For the S&P 500, it bottomed out back here, tried to rally and then bottomed again, and then has been rallying since. And you can see that the selling pressure was well above the buying pressure until fairly recently here when they crossed. But again, the 1 month trend line is positive, and the 2 month trend line is also slightly increasing. So this is looking good so far. And what about the NASDAQ 100? Well, I would have loved to have seen the NASDAQ start rallying somewhere back here, but that didn't happen. It started rallying late, better late than never, I guess. But you can see the selling pressure was above the buying pressure here. A couple of weeks ago, the buying pressure crossed above the selling pressure, and you can see we've got an upward trend line here and a 2 month trend line that's increasing. So this looks pretty promising. What about the Russell 2000, small caps? Well, remember, these started rallying first, before the Dow, before anything else, way back here. And you can see they've continued to rally. So that's encouraging, because small cap stocks are typically more risky than some of the other ones, certainly more risky than the Dow. And you can see that the buying pressure is really far above the selling pressure here. This is a really good look, and the trend lines are also very positive. And then finally, the Ark Innovation ETF, ARKK. This one started rallying very late here, kind of like the NASDAQ. And you can see the selling pressure was well above the buying pressure and just recently crossed within the last couple of weeks and is hopefully going to continue this upward trend. Let's take another way of looking at the market, kind of another slice, if you will. So what I'm going to do here is I'm going to show you the best ranked sectors and the worst ranked sectors. We use our natural selection algorithms to rank these different sectors to determine which ones are more likely to be good investments and which ones are more likely to not be good investments in the shorter to mid term. And so I'm going to share with you what we're seeing. So what are you looking at here? Well, I've got the sectors. The one ranked 1 is obviously the best, and then the higher numbers are ranked not as good. So just like if you're ranked in sports and you're ranked number 1, you're the best. If you're ranked 100, you're not so good. So energy is clearly ranked number 1. Aerospace and defense is the next highest ranked sector. Industrial 7. And don't get thrown off by the fact that these don't go 1, 2, 3, 4. There's some screwiness that goes on in the way we rank them, and they don't always go 1, 2, 3, 4. So, but still, a lower number is better. And you can see how the broad index, the Dow Jones Industrial Average, is actually ranked better than many of these. But I'm encouraged that small caps are right behind the Dow Jones Industrial Average. So you can kind of get a sense here of how the sector rankings are doing. And you'll notice that Treasuries are nowhere to be found on these top ranked sectors because they're not healthy right now. Now let's flip this and look at the bottom ranked sectors. So the absolute worst bottom is the long bond, 20-year Treasuries. As I mentioned, Treasuries are not healthy right now. Ranked 66. Emerging markets aren't doing well. Innovation, not doing well. Remember, I said I'd really like to see this one move up. Now it has moved up. It was ranked 70 back here. Now it's 58. So it's accelerating. It's moving up. But I'd like to see it do a whole lot better. Real estate, no surprise here. We've got a rising interest rate environment. And while inflation is good for owning real estate, high interest rates and inflation are not good for building real estate. You can see that gold isn't doing very well. Bitcoin has not been doing very well, although it was much worse back here, just like ARK was, and it has been improving. So that's encouraging. Now let's look at the buying and selling pressure for Treasuries. Because again, remember I said these are not in a healthy place. Well, you can see why. The selling pressure was way above the buying pressure here. Here's the buying pressure. Here's the selling pressure. Now, the selling pressure has been declining over the last 2 months and over the last 1 month. So maybe we're finally starting to see the bottom in the Treasury market. I mean, they have really been wrecked this year. And you can see more recently the buying pressure has moved above the selling pressure. We'll have to wait and see what happens with this going forward. Now, what about gold? Gold is a hedge against geopolitical risks, wars, bad things across the world, and it's also a hedge against inflation. Well, you would think if inflation was such a big problem, gold would be going up, but it hasn't been. In fact, it's been kind of faltering here, just kind of going up and down and sideways, nowhere. And you can see that here. It tried to rally here. You can see the buying pressure was above the selling pressure, and then it failed. And right now, the selling pressure is above the buying pressure, but then they just crossed in the last couple of days. I don't know where this is going to go, but it doesn't tell me that there's any inflation. We know there are geopolitical risks, but the market isn't running for gold yet. And what about Bitcoin? So I use the ETF GBTC to evaluate what's going on with Bitcoin. Now, Bitcoin isn't a digital gold. I know people talked about that before. It's not a safe haven asset. It's not an inflation hedge. It's a technology. In fact, it's a very risky technology. So I look at Bitcoin and other cryptocurrencies as an indication of the risk appetite of investors in general. So you can see way back here when small caps started to rally, Bitcoin kind of started trying to rally and kind of went up, went sideways, and now it's starting to rally again. And you can see what's happening here, that the buying pressure has really moved up here, well above the selling pressure. And the 1 month trend is very positive. The 2 month trend is positive as well. So this might indicate to me an increasing risk appetite and hopefully an indication that we may see the equity markets move higher going forward. So after all this analysis, how do things look? Well, to me, it looks like we have a somewhat tentative bottom in the equity markets here. I don't see the typical behavior that I'd like to see with the riskier assets going up first, going up further, and going up faster. That's not happening yet. It's starting to. So hopefully we've seen the worst of the equity markets. I'm really hoping that Treasuries settle down and get a little bit more healthy, and we could see cryptocurrencies take off and go higher. And hopefully the Phillies will beat the Astros tonight. I'm Calvin Rose, and if you liked this video and found some value, please hit the like, subscribe, and notification bell so you won't miss an upcoming episode of Invest Smarter. That's all for now. Hey, thank you for watching. If you enjoy these videos, there's several ways on Patreon for you to support the channel and access exclusive content, including special posts on the markets, educational materials about how to select investments and manage your portfolio. And at the investor level, you'll have full access to our natural selection stock rankings so you can evaluate individual stocks or market sectors that fit your investment style. Check out the link at the pinned comments below, and thank you for your support.